long way in as far as the economy is concerned. Michael Marilia, thank you so much for that update. And of course, as you mentioned, the guests that we'll be talking to, I'm joined by Maarten Ackerman, who joins us from Citadel Asset Management. Thank you so much for coming through, Maarten. Let's talk about this recession. Hardly surprising, is it?
Yeah, the market is quite surprised, but if you think about it, we knew the economy is quite weak. We had the first quarter with quite a deep negative, and then all the data coming out, manufacturing, retail, yesterday the PMI, all pointed to quite a weak economy. So I think the surprise is the fact that now, yes, given the textbook definition, we're in a technical recession. But the reality is, if you think about it, for the past 5 years, we've grown around about 1.3. We were growing less than the population. The population is growing at 1.6. So in my view, that's also a recession because it's not enough growth to grow in line with the number of people in the country, to create jobs, to help government to collect more tax and to sort out the fiscal deficit and job creation. So we've been in a very weak environment, and I think right now the concern is more to say, well, now it's official that it is a technical recession.
What's your reading of the story around agriculture, Maarten? Because at some point, and I thought I was misremembering things, but actually it turns out I was right. At some point it seemed like agriculture was sort of clawing its way back after that, drought situation that the country faced. But in the last 2 quarters, it's actually been one of the big contributors to the decline in economic growth. What's the story there?
Yes, I fully agree with you. I think, 2016, we had the drought and almost no proper crop whatsoever. Then 2017, the drought was over and we had the best crop in the South African history. So we're coming off a very high base effect. And in fact, last year standing here, we said that we were seeing quarter-on-quarter growth in agriculture, 30-40% through the course of 2017. And for the year altogether, it increased by about 17.1%. So we warned that, almost an agricultural recovery last year is unlikely to continue this year. So we expected that the base effect will come into play. And yes, it was quite severe in the first quarter, 33%. They adjusted it downward today. And the second quarter, again, 30%. So it is a bit of a statistical factor coming into play. If we remove that from the number, then this number is still barely positive, maybe 0.1%. So we still need the other sectors in the economy to start picking up and contributing to economic growth. The good news is that the agricultural base effect will actually fade through the rest of this year. So it's unlikely to continue with these kind of big numbers we've seen year to date.
To what extent are we seeing the tail end of the effects of the drought in the Western Cape coming into play in these numbers?
Yeah, the Western Cape drought is hopefully passing. The dam levels are much better at this point in time. But agriculture in the Western Cape is quite a small part relative to the bigger agricultural picture. And agriculture altogether in South Africa is only 4% of the economy. So I think it was more the drought we had in 2016 up north that had quite a significant impact.
All right, but what is the impact then, Maarten, if we stick with agriculture for a moment, on farm workers, the manufacturers and food producers, as well as consumers?
Remember this, the decline is obviously quite negative, but coming from a high base effect, it doesn't mean that nothing is happening. It's less growth compared to last year, but we're still making progress compared to the base in 2016. So I don't think there's immediate threat for farm workers. I'm more concerned about the household expenditure that declined 1.3% in this quarter. Because we're a consumer-based economy, that should be about 60-70% of the economy, and that's a clear indication that the consumers are struggling. So if you go back to the previous report on the fuel, the increase in VAT, high unemployment, wage increases that might not keep up with inflation, the consumers are really feeling a lot of pain, and that's a warning sign for South Africa.
What does the dreaded R recession do to us in terms of how we stand in the eyes of entities such as the credit rating agencies? Does it put us back firmly on their watch list?
I think so, unfortunately, and that's probably why the Rand reacted it did today, also the bond market. So the rating agency said that the bottom line is actually not the debt metrics, but getting growth right. If we can get growth right, then everything will fall into place. We'll create jobs, we'll collect more taxes, and our fiscal challenges will actually reduce as a result. So I think where we are right now, the numbers that the government used in the February budget is very unlikely to pan out. So probably next month in the medium-term budget policies, they will reduce those numbers, which actually implies more pressure on your fiscal targets. And then since February, had things like more than inflation increases in the public sector, the stimulus program that the government is talking about. So it's going to be quite a challenging budget. And as a result of that, I do think the rating agencies are going to sit up and listen quite carefully. And I think the risk for a further downgrade, if we can't see a turn quite soon, unfortunately, is back on the table.
If you were advising Nhlanhla and Cyril Ramaphosa ahead of that medium-term budget statement, what do you say?
I think, it's so unfortunate that we've seen such a weak first half of the year. Because it's not really as a result of the current administration. I do think they do the right things. They're moving in the right direction. But the things they're doing right now is addressing structural issues, legacy issues that actually we're seeing right now. So the weak growth currently is legacy issues of the past 5 years, structural issues that we need to address with the right policy. And that's what they're doing right now. But it will take time, and we will only see the results maybe even in years. So I think, my message to them would be to keep going. We are moving in the right direction, not to be too negative. I think, especially if we get the agricultural base effect out, there might be some upside. And I think probably the sooner we can get clarity on the land issue and the mining issue, that will unlock a lot of capital and confidence that can return back to the market, which is what we need at this point in time.
So, if you were also then advising them on this stimulus package that they're talking about, I think they're talking about 48 billion rand.
Yeah, it's around about that.
Where do you channel it? What is your key focus? Because, if we assume that you need one or two other sectors to sort of start firing, I see the numbers on mining are sort of looking decent, which I wonder if it's sustainable given what we've seen over the period of this last quarter in that particular sector in mining. But let's say, you have mining sort of looking better than it was in the last quarter, and you need a few other sectors to kick. Where do you channel this money?
Yeah, I do think just on that positive side, so yes, the number is quite negative, but we've seen good growth in mining. Construction, electricity, finance, they all were growing around about 2%, and that's really the growth engine of the economy. So if we can get the real detractors and fix them and get them out of the system, growth can already be closer to 2%. So I think where the money needs to be channeled towards is where we can create the majority of jobs. And right now in the South African economy, we can create a lot of jobs in agriculture, mining, by supporting more policy in that area, and manufacturing. So manufacturing still ended flat for this quarter, but it's a big component of the economy. It's about 13% of the economy, where mining currently is much smaller. So channeling the assets or the stimulus rather towards those kind of industries can really kickstart the economy to create jobs on its own, and not just through government interference to actually create more jobs.
All right, Maarten Ackerman, thank you so much for coming through and sharing those insights with us. He is, of course, a chief economist and advisory partner at Citadel Asset Management. While President Cyril